Nothing. Hey, okay. Thank you for joining Capital Advantage Tutoring's live Q&A. Actually, somebody emailed me some questions, so we'll get right into it. No love. Do I get to leave early? Hey, Carolyn, how are you? Savoy, LV, how are you? I thought I was going to home early. Nobody was on here before. Okay. So somebody asked me some questions before. They sent me through Reddit. Okay. Okay. So here's a question we got. Maria, Mark, how are you guys? How's everyone going? Okay. So here's a question somebody got. Amortization, and hope the person's on already because I'm doing it now early. Amortization of a municipal bond premium for tax purposes results in. Okay. Brittany, how are you? So, Philly. I can't like Philly because I'm in New York. So, okay. So first of all, amortization of a municipal bond premium for tax purposes results in. Cynthia, no change in the bond's cost basis, a decrease in the bond's cost basis, no change in the amount of interest income received, and a decrease. Eddie, how are you? And decrease in the amount of interest income received. Oh, those are great scores. This is for the Iron, how are you? Kelly, hey, look at that shot. You got early. Okay. Savoy, what's wrong? Those are good scores. Those are solid scores. Okay. Okay. If you pass, yes, I did. I'll see you tomorrow, JC. Now, so amortization is when you take a premium bond and you're lowering the cost basis every year. So if you buy a $1,200 bond and it's 10 years to maturity, you're going to take the $200, the amount above par, 200, divide it by 10, because that's the number of years to maturity. And then that's be 200 divided by 10, that's $20 a year. So they would reduce your cost basis by $20 each year. And that's what it would do, okay? Now, and it wouldn't change your interest income, okay? Yes. So it wouldn't change the interest income because when you buy a bond, a 5% bond, it is always paying 5% no matter what. So even if you amortize or accrete, it doesn't matter. There's no impact on the interest you're receiving because the coupon is the coupon. So remember, amortizing, you're taking the premium bonds and you're amortizing it down. You're reducing the cost basis. And by the way, only munis have to amortize when they're premiums. Treasuries and corporates do not have to. So if you have a discount bond, you're accreting, okay? If you have a discount bond, you're accreting it. And if it's an OID, zero coupon, you must accrete. You're increasing the cost basis. And if it's a secondary market bond, you don't have to do it till the end. You will have to do it eventually, but you don't have to do it to the end. Okay. Let me get on that one. Okay, so now. Oh, yeah. Okay, so whoever, the person who sent it to me, hopefully, Jessica. Okay, the chart's fine. Okay, hold on. OID, corporate bonds, you must, may, right. Okay. Right. Muni bonds, not taxable. OIP, you must decrease. Right, yeah. So it is. Allie, how are you? So it is Vanessa. How are you? So now, Shauna. So now, okay. First of all, Savoy, stop taking so much exams, read in between. Okay. Now, hey, Maria, what'd they say the answer was on that one? Okay, so now, Bert, yeah, I can talk about that. Oh, right. So the interest, okay, so what happens is, Jessica, that the interest doesn't change, okay? The interest, Greg. So now, you're studying for the 66 now. So the amount of interest that you're getting doesn't change. If you have a 5% bond and you pay $1,200 for it, you're getting 5% a year no matter what. You're getting $50. That doesn't change. The amortizations, just answer it. Pick an answer, okay? Okay. pick an answer and go from there. So now, and we want to talk about it. That's what we do. So amortization lowers your cost basis. Accretion increases your cost basis. It doesn't change your interest income. There you go. Okay. So now, an at the market offers. Okay. There's not a lot of formulas. Okay. Alejandro, there's not a lot of formulas. There's some, but it's not going to overtake the whole thing. So an at the market offering is instead of like, so this is more of a 24, but it could be on the 7. An at the market offering is when instead of us doing an IPO price, like one price at the night before and pricing it, at the market means we're offering it to the public as it's trading all day long. So that's why you can't stabilize the bid, because that would be manipulation. So you're offering it at prices during the day to people where it's trading. That's what it means by an at the market offering. That's all it is. Okay. Hope that helps a little bit. And that's why you can't do stabilizing, because you can't buy it while you're selling it and you're going to hold the price up, and that would be manipulation. Okay. So, okay. Right. Okay. Don't worry about it. Oh, that helped. Okay. Don't worry about it. It's fine. An IA. So an IA is not a broker dealer, but it's not excluded. They say it's not excluded, but an IA is not. And an IA is not a broker dealer, but here's why it's not 100% excluded. Because if you're a broker dealer and you give advice as a business, you will have to register as an IA. That's kind of the reason why. Okay. We'll go back to this. The Conduit Tax Treatment. So if a mutual fund or a REIT, only mutual funds and REITs do this, if they pass through 90% of their income, that means you as the investor get all of the income without it being taxed. Unlike a corporation where it's going to be, where it gets double taxed. Remember, so if a corporation gets money, they get taxed, then they pay you a dividend, and then you get taxed. So on a REIT and a mutual fund, they make the money. If they pass through 90% of it to you, then that money has never been taxed. So when you pay tax on it, it's only been taxed once on your end. So you're actually getting more money. That's what a conduit tax treatment is. Limited partnerships don't have that because they pass through everything. Limited partnerships actually don't pay taxes. The actual company doesn't. Hope that helps, JC. Okay. Okay. Right. That's true, Savoy. A person is not under 18, is not dead, is not mentally incompetent. Okay. Okay, Mark, you got to get them up. What is that past perfect you're using? I can't remember. Okay. Okay. So what's not, and we did this. So what's not a BD? A BD, an issuer is not a BD. A bank is not a BD. An IA is not a BD unless you're charging for the advice. An agent is not a BD and an IAR. Those things. So a bank will never be a broker dealer. An issuer will never be a broker dealer. An IAR, an agent can't be because they're individuals, and IA and broker dealers are firms. Okay. Now, okay, somebody else has another question. Yeah, here's the thing. There's not a lot of formulas. The 66 has formulas. The 7 has some. I mean, you have to do parity. You have to do options. You have to do margin. So there's definitely going to be some formulas on there, but it's not going to go crazy. Okay. 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 Test in the AM. Yeah, see, LV remembers everything I say. She always knows that it's test. I love testing in the morning. Okay. Okay. Shh. Ginger, I didn't see you pop on. Okay. 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 Good, good, good. Our REIT's heavy on the 7. There's going to be questions. Now, I have somebody who took it the other day, and she said that she got quite a bit of customer accounts. So don't blow the customer accounts off, okay? Guys, do not blow off the customer accounts. Work on getting that down. Like, that's an easy stuff. Just reread that every few days, because a lot of people go, oh, I had it. They tested me on the SIE. They're not going to do it again. And that's what the student said. Okay, Carolyn, I'll get to that. An IA is an investment advisor. Hold on. Okay, hold on. I think I missed something. Okay. Oh, that's interesting. Everyone, that's good. That's a good question. Okay. I tell people it all depends on what you are. Okay. So I think somebody asked a question. Blank screen. Uh-oh. Okay, that's good. Look, blank screen's better. You don't need to see this face. Okay. So now, okay, so somebody asked what an IA is. An IA is our shorthand for an investment advisor. An investment advisor is a firm that gives financial advice, that gives advice on securities as a business for compensation. So it's a firm that gives advice for compensation on securities. So there it is. Okay. Okay. Yeah, here's the thing, Cynthia. If you are a morning person, take the morning. The other thing is if you get nervous, mornings are better because then you have less time to freak out. Okay. Okay. LV, you're taking it in 5 days? You got this. Okay. Oh, okay. I just saw a lot of shit pop up. Okay. Oh, Ginger, you're all gone? I'm sorry. Okay. Yeah, price to earnings, bond conversion ratio, like what's better to sell the bond. Okay. Right. Can you hear me, Ginger, or no? Okay. Okay. Yeah, okay. So Jessica, yeah. So I'm not saying that the 67 is okay on a past perfect. You want to be in the 70s, but past perfect is legitimately harder than the test. Okay? That is definitely harder than the test. It really is. There's no way around it. That past perfect goes a little too deep. They go a lot too deep. So there's not much I can do about it. If you can get in the mid 70s, that's great. If you're getting low, high 60s because of options or because of the crazy math, then you should be fine. Because past perfect really takes the math to a new level. It's unbelievable how they do that. Okay. Yeah, they might seem like gimmies, but they are if you study them. If you blow them off, then you're gonna get your butt kicked on them. Okay. Okay. Yeah. So for the most part, I've seen somebody get a PE ratio where they had to do it. Okay. Yeah. Here's the thing, Alejandro. The whole thing with that, the margin that long plus credit minus short market value minus debit works for equity. But the question somebody got was they didn't ask for equity. They asked for the SMA. So I tell everyone, if you get and I'm almost done with the margin video. If you get a margin question and it's a combined, I say do the long by itself, do the short by itself, and then add them together. That's the kind of way I do it, because if they don't ask for equity, they ask for SMA or buying power, you have to kind of do the whole thing over again anyway. So, I mean, if they do equity and you can remember it, that's fine. But sometimes I don't mind people doing each on their own because it's not that hard. Less chance for a mistake. So, Bert, auction rate securities are muni bonds. And what they do is real quick, they pay an interest that floats. But it doesn't float like a VRDO, which floats based on movement of the interest rates, and they move it. The auction rate security, what they do is they do an auction every 7, 28, 35 days, whatever it is. And if you want to sell your bond, your auction rate security, you have to sell it in the auction. And what happens is the people who sell it put it in that they want to sell it. The people who buy it put in what they want to buy it and what rate they're willing to accept. If not enough people want to buy it to offset the selling, the people who want to sell it, the auction fails and nobody gets to sell their securities until the next auction. So that becomes a problem. That's the two dogs fighting it out. So, interesting. I'm going to make sure they're actually having, he's just playing. So the auction rate securities, they have a liquidity issue because in reality, it's never really happened, but it could fail 20 times in a row and you can't get out of it. Remember, you cannot get out of the auction rate security if the thing fails. And that's what happens. So, and that auction determines the rate for the next 7, 28, 35 days, whatever it was. Okay. I could just read the chat. Okay, so no. Okay. We got that. We got this. Okay, low 70 to press A with it. Yeah, okay. Yeah, that's the one thing. So if you have, here's the thing. On the 7, you want to be in the mid 70s for the past perfect, only because they're harder and that 7 is harder. For the SIE, if you're hitting 70, 71, 69 on the past perfect, you're probably okay. No guarantee, but you're probably okay on it. Okay. Yeah, the dogs are going crazy. Okay. Okay. Okay, so Savoy. Right. So yeah, I focus. You got to do a reading. You have to read and do tests. You have to you almost have to use a test to find out what you're going to read. So Savoy. Okay, so you're taking 3 exams left. So I would take, you could probably take one, and when are you taking the test? Probably in a week or so. So I would take a final, maybe put a mask on to get used to it, take a final, and then review, spend the next day or two reviewing the topics that you didn't do well on, then do another final and keep doing the same thing. Do not take the green light out Friday. I would take the green light tomorrow because you want enough time to recover and go, oh, I'm weak in this. Because the green light's just telling you, if it tells you where you're weak, that's great. But it's also Tuesday. You don't want to take any tests on Thursday, the day before the test. So I'd really focus on taking more tests tomorrow. And if you want to take one final, like Thursday morning, to give you, it would still gives you time to recover and look it over. That's fine. But again, I am not a fan of taking tests the day before or at night. So if you take one after this live, I'll be pissed because you can't do it. Okay. Got it. It's Friday. So I would try to take much. Kelsey, so I would try to take as much as you can. Okay. Okay. Jennifer. So this dummies book once you read it once and then you start on the real stuff, stick with that. Don't go back to it. So the dummies book, yeah. Everyone's worried about their scores. It's funny, but yeah, that's funny. I know I hate it, but here's the thing. Let me finish with Jennifer and then Alejandro. So Jennifer, yes, reading the dummies book to start is solid. It's a good way to start. It makes the book a softer read. And you're taking the Series 7 book, so it's good to start and then just put it away and start reading the books. But if you have like Exam FX or AD Banker or NRS, which is Fire Solutions, get a new book. Okay. Gabby, I don't actually know the format for that. I'm telling you, if you've passed the 7 or the 6, you're gonna be fine. It's not that hard. Okay. Kelsey, hit it up. Maybe I can answer it, maybe I can't, because sometimes the wording's a little different. Alejandro, don't worry about the words. Don't worry about exempt versus exclude. They might do it, but on the 66, it's more about do they have to register or not. That's kind of the way it is. It's like if you're a broker dealer, what's not a broker dealer? A firm that issues securities, that's not. A trust that sells securities, that's not. A firm that executes transactions, boom, that's a broker dealer. That's the kind of questions they're going to have. The good thing about the 66 is that it's straightforward. It is a hard test. It is an absolutely hard exam, but it is pretty straightforward. Okay. Actually, so interesting that somebody said they got a life insurance question on the Series 7. Okay. So you do need to understand AIR. Okay. You do need to understand annuities, but on the 7, you do need to know the insurance. And I have that how to pass the Series 6 thing called insurance in the 6 playlist that could help you with insurance stuff. You do need to know AIR. You need to know that it's a benchmark and that basically your okay. For the what's the TOR? You mean for the toy? Okay, hold on. Okay. So let me go back to this. So Carolyn, yeah, I would say you need to know the insurance. Watch the little video on it. That should help. AIR again is a benchmark, and based on how your separate account does versus AIR, that tells you whether your payment goes up or down. If you beat AIR, your payment goes up from the previous month. If you do the same as AIR, your payment stays the same as last month. If you do worse than AIR, your payment goes down from the last month. But the AIR is not a guarantee; it's just a benchmark. Okay. Okay. So the client wrote a review for the agent. This is a great question. So let's see if I can get this. The client wrote a review for the agent, the register rep, then sent it to the register rep for review, and then added something, then sent back to her, and then she posted on our website. Okay. That would be interesting. I think that wouldn't be, and then if the client wrote it on their website, that's what they call entanglement. Okay. So entanglement is if somebody is a third party tries to write a review and you get involved in part of it, you're entangling it. That's not okay. You can't be involved in putting something on a third party. So they would usually call that entanglement. Adoption is if somebody posts something and then you retweet it or like it. That's adopting it. That's fine. But entanglement is when you have a third party do something, but you're involved in doing it. That has to be what it is. Okay, that's fine. Do that. That's fine. Okay. Oh, that's perfect. That's great. Yeah, that's right. You can create your own playlist and stuff like that, and it helps. Just make sure you do the suitability. Okay. I saw some questions about private security transactions and the tax benefits being received by the employee. Okay. So I'm not sure what the question is, but understand that if you have a private securities transaction, that means you're doing transactions off the books and records of the broker dealer. It's either going to be you're doing transactions in your own, trading yourself, or you're acting as a broker, as an agent. If you do trades, if you act as an agent outside your broker dealer without permission, that's called selling away, and that's not okay. Selling away, it's not okay. It almost rhymes. If you get permission, it's called a private securities transaction, and you can do it. But so understand, if you do private securities transactions off the books and records of the broker dealer, you need to have prior written permission. If you open a brokerage account at another firm other than your own, you need prior written permission. If you want a job outside your firm, you just need to notify them. Okay. I hope that helped. Okay. Yeah, no music. That's funny. Yeah, that's funny. No music. That's horrible. Okay. Oh, yeah, the dog's in the bed. That's one of them. Yeah. Is he there? Yeah, he's. And then they have the two down here sleeping on top of each other. Okay. So, Catherine. Okay. Oh, the energy drink, get pumped. And I always tell people when you walk in, so this is what I tell everyone. An arrow goes where you point it, right? So if you think I'm going to pass, you're more likely to pass. If you think you're going to fail, you're much more likely to fail. So remember that, okay? It's a Kenism, I think. Okay. But it's a true statement, so probably somebody in the history of the world said it. Okay. How detailed the SIE get into options-related questions? There's going to be questions on them. Somebody I know said they got 4 of them. Mostly basics: buy a call, you're bullish; buy a put, you're bearish. What does buying a call give you the right to do? The right to buy. Buying a put gives you the right to sell. Stuff like that. Okay. If he is getting, so employee can do private security transactions. Yeah, why not? Oh, okay. If he's getting a tax benefit of doing it, as long as he gets permission, yes. As long as you get permission, you can do anything you want, pretty much. That's all it is. So, because getting a tax benefit, I guess, seems like it's going to seem like it's commission. Like if you get a tax benefit from helping you, that might be compensation, and you need permission. Okay. Are there certain securities more important than others? I don't think there's other securities, but what will they ask questions about? Equity. You'll get quite a bit on preferreds. This is the 7. You get quite a bit of preferreds. I'll get back to you, Catherine. I didn't forget. You'll get probably a bunch of questions on preferreds, a bunch of questions on opening accounts, and then suitability. Everyone says they're surprised that they get so many questions on preferreds. They're not like crazy hard questions. They're just there. Okay. And a lot of the tax stuff, yeah, obviously it's going to be, cost basis versus proceeds stuff. Okay. I hope that helped. Because the problem is, if you don't know the whole question, it's there, but I think that should have helped. That if they have permission, they can do it. And like I said, I think a tax benefit, if they're saying that's going to be his form of compensation, then you're selling away without permission. Like if you help a friend, like if your friend's starting an app and you help him, but you don't get paid for it, you just introduce him to people, it's fine. You're not doing it for money. But if they pay you in any way, shape, or form, a job, any kind of anything, then it's compensation. Okay. Kelly and Catherine, this should help you. On the SIE, you should get between 0 and 4 option questions. Not that hard. Knowing bullish or bearish, knowing what's for income, like you sell calls for income, you sell options for income, you buy them for either speculation or protection, whatever it is. Okay. You may not know if you're long stock, you either buy a put or sell a call, or if you're short stock, you buy a call or sell a put, that kind of thing. Okay. Yeah, a lot more preferreds than people think. Okay. And if at the SIE between 0 and 4 questions on this top off, it's between like 10 and 30. I mean, really, it could be 30, it could be 10, it depends. So it depends if the test you get. It's random. Okay. So yes, if you don't know, here's the thing. So say you get 20 option questions, 5 of them will be spreads. Maybe another couple will be straddles. You need to know it. They're not that hard. So work on them. They're the easy, actually, most of my students say they're the easiest part of the exam once we get going on it. Okay, they're not that hard. Okay. What's an example of a preferred question? They may go, yeah, they don't cover a lot of it, but right. If you have that chart, if you have the box that everyone talks about, right, that most have, it's yeah, they won't be diluted. Okay, so preemptive rights. Is there? Yeah, so that's the whole point of it. So I'll get to a shot on that. So like there's a box with buy call, buy put, sell call, sell put, max gain, max loss, break even. People have that. You can probably find it on Google too. That'll help you on the SIE. Not as much on the top off because you need to know your shit, but that should help. Okay, an example of a preferred question would be like, which of the following preferred would be the most volatile in a stable interest rate environment? It'd be like a cumulative preferred, participating, a convertible, or something like that. And if it's a stable interest rate environment, it's going to be it'll be a convertible. But like they might say, a cumulative preferred gives you what? And then it lists the 4 things, and you have to know that cumulative gives you back all your you have to pay all the past dividends for all the past years, not just this year's. Okay. Stuff like that. Nothing crazy. Maybe what do they want? What's the current yield on a preferred? Maybe do convertible preferred instead of convertible bond. Stuff like that. Okay. Preemptive rights. Okay. So a preemptive right, remember, so a preemptive right, if you own shares, see, here's what happens. What the confusing part is when they issue new shares, it's technically dilutive because they're issuing more shares, but they're giving all of the previous stockholders rights so that you can buy shares to keep your percentage ownership, which means it's not dilutive. Dilutive means like if I have vodka in here and then I pour water in there, I'm diluting it. What happens is it's not Diet Coke. It's crazy. I haven't had a Diet Coke in almost 2 weeks and it's weird. Okay. So if you own 10% of the company and there's 1 million shares outstanding, you own 100,000 shares. If they decide to issue another 1 million shares, they're going to give you the right to buy another 100,000 shares. So you stay at 10%. If they didn't do that and they just issued new shares, then your 100 grand would be a percentage of the 2 million and you'd be a 5% owner. That's dilution. Okay. Dilution is when your ownership gets diluted and you own less shares because of something the company does. Like issuing convertible bonds could be dilutive because if people exercise, there's going to be more shares outstanding. If they issue warrants, it could be dilutive. Rights don't, because you're getting them. The actual new issue dilutes you, but the rights don't dilute because it's to keep your percentage ownership. Okay. Okay, so LE. Okay, so now an investor purchases a 3x leverage ETF. The index value is 100. Okay, day 1 it falls by 10. So we're going to do my calculator. So this is what happens. So each day you have to do it. So we started at $100, right? So now it went down by 10%. So it's a hit phone, not calculator. That's really smart. So we start at 100. So here's the deal. An investor purchases a 3x leverage. That means the ETF is going to move 3 times as much as the market, okay? On day 1, the index falls by 10%. So we're going to start at 100. And we know the index went by 10, so we're going to go 3. So we're going to do times 0.7. So now we have a 70. Our new number is 70, okay? Now, the next day, it goes up by 10%. We're going to go up by 30% because it's 10 times 3 from 70. So we're going to do 70 times 1.3. Our new price should be 91. I hope that's the answer. Kelly, if not, I'm too tired and I screwed it up. So again, you start with a number. And if the ETF says it goes up 10%, then up or down, you move that number. So in this case, the market went down 10%. We do 3 times that because they're a 3x. We're going to go down to 70%. We're now at $70. That's our new price. It resets. And then when it goes up, it's going to go up 10% or 30% for us from 70, not from the 100. And that's why an leverage ETFs are not good for long-term holding. They're for trading because they reset every day. I'm stupid. I buy them and I hold them, but only tech ones. Okay. I think this was a good one. I answered a lot of questions. I didn't stop talking. Okay. Again, so Catherine, I'm going to go back to this on the SIE. It's not going to be like the 7 where they want you to do a lot of the profit loss stuff. It's more about max gain, max loss, break even, maybe like buy a call, max gain unlimited, max loss premium, sell a call, max loss unlimited, max gain premium. Oh, wow. That's interesting. That if you buy a call, your max gain is unlimited, and you sell a call, your max loss is unlimited. Oh, they're opposite. So break even on calls is always strike plus. Break evens on puts is always strike minus. That's if they're by themselves. If there's a stock position, it's a lot different. Okay. 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 Great question. Okay. Okay. So for the 7, so you don't need another one. You can do mine. There's you can do the SEC. If you want more stuff, you can do the achievable thing down there and try that. That's fine. You don't have to. It doesn't matter. For the SIE, no, you're fine. STC is fine. If you want to, again, you want to do the achievable to add more shit, that's fine. But STC should be more than enough to get through. Happy if you buy the achievable. I make money on that, but it doesn't matter. Okay. So now, on the 63, the language is not straightforward. It's a lot of oh, Johnny, you asked Alejandro, that's good. Okay. So the 63, the questions, some people think they're okay. Some people, it depends what one you get. Some of them are long. Some of them are really, really, really long. Okay. Some of them are like paragraph questions and then easy answers. Some of them are easy questions and paragraph answers. But you just got to know the rules cold. You have to know what's a broker-dealer, what's an agent, what's an IA, what doesn't have to register. If you know them, that'll help. You'll definitely get some ethics questions. You'll definitely get to what's not a broker-dealer, what's not an IA. Okay. Okay. Yeah, okay. So LV, did you see that shot? If you don't get it, let me know and I'll shoot a yeah, Carolyn, you can go on there and get it, and I think I can shoot me an email and I'll send you that. There's a discount code I can get you for Achievable too. Cynthia told me I can do it. I called them up and they gave it to me. And if you're a veteran or disabled or something like that, they can always give you. Okay. Yeah, again, the math is not, you technically could blow off all the math and still get a mid-80 on the exam, on the 7. Okay. Okay. Yeah, if the 63, yes. I think if you study for 2 weeks for the 63, you'll be ready to kill yourself by the end of 10 days. Okay? Yeah, this math isn't that bad, LB. On the math isn't that bad on the 7. It isn't. Okay? Okay. By the way, how is this edit group going? Is anyone using it? Is it working? I don't know. I haven't heard anything. Let me know. Johnny. So, Johnny, you asked for shot on the 66. So, I'm going to give you a little advice. Read the damn book. The best thing you do is read the book. Get the regs down. The back end, which is all the mathy PE, the present value, future value stuff, Khan Academy does a good job on that. But get the regs and rules down pat. That's half the test. The other stuff is not that hard. I mean, if you get 1 or 2 math questions, that's going to be a lot. You really do. On the 66, there are not a lot of math questions at all. Perfect if I do that. Okay. 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 Why, LV, why are you getting anxiety? Is it because you just want to have, LV, call me tomorrow morning. Okay. Okay. Yeah, you should. And I tried to get, I think Kelsey was supposed to do it. I hope people are talking to each other. Sometimes it's just mutual support. Okay. That's all it is. I mean, I'm not doing a lesson, LV. I'll just, a couple minutes we can talk just to see where you are. Okay. Okay. May or may not. That's funny, Greg. Okay. Okay. Yeah, Cynthia, shoot me a text, send me an email, and I'll send it. I'll reply back to both of you. Okay. Yeah, real interest rate. What is that? That would be the expected return minus inflation. That gives you the real rate of return. Okay. 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 The underwriting spread is the difference. So I'm not going to go into the whole math. I did it before, and maybe I'll do it tomorrow, Thursday. The underwriting spread is, and I have a picture. Maybe I should do a video on that. But the underwriting spread is the distance between what the difference between the underwriter pays the issuer and sells it to the public. Okay. 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 So why not? Let's go. Get on it. Start reading the book. So just get on it, Kyle. Just read the damn book. Just start reading, reading, reading. That's the best thing you do. Okay. For the 7 full-time study, 4 weeks. If you do full-time and it doesn't mean thank you, okay, it could. Phase of business cycle could come up, okay? But back to this underwriting spread, see my ADD, is the difference between what the issuer pays, okay? And Kyle, if anyone in that Facebook group wants to get on here, tell them to join. I'll answer questions. The underwriting spread is the difference between what the issuer pays to the issuer gets from the underwriter and then what they sell to the public. So if I issue a bond at, I've done it, look on my last couple of videos, I've done it 2-3 times. If I didn't do it now, I'll do it Thursday because I've done it. It's almost every live I do, I end up talking about that. And it takes up time. So look at the last 2 lives. If you can't find it on there, I'll do it Thursday. So the underwriting spread is a difference between what the issuer receives and what they sell it to the public. Then they have other breakdowns, which I can do Thursday. So I can do that on Thursday and do that. Okay. Yeah, Kelly, I thought, Kelly, reach out to, LV's going to start it, but she's taking it and going to pass it on Monday. So she'll be done, but see if we can get a group going in there. Okay. So again, Kyle, if you can do, 3-4 hours a day of studying, you should be 4 to 5 weeks at max. If you do anything more than 4 hours a day, that's too much because you're going to burn out and not really, it's going to kind of have diminishing returns a little bit. You're going to get too tired. Okay. Okay. Kelly, go on my website, the Cap Advantage Tutoring, shoot me an email. Unless I have it. I think if I don't have it already, shoot me an email and I'll shoot it over to LV. We're trying to get everyone to connect to do something, but LV is going to take this money and destroy the test. I know she will. Okay. I think that's it. So anyone who wants to, okay. So Julie, I didn't see that. Okay. Good thing you answered. Okay. So tomorrow, no. Oh, if you do, okay, let me hit Julia first and then hit Shaw. So Julia, if you're taking it Thursday, so tomorrow's the only day. So if you're passing the exams, whatever, tomorrow really should not be about taking tests. Tomorrow, if you have SDC, read the Crunch and Facts, do their learning guide, skim stuff. If you have Kaplan, they have the trending topics. Make sure you know that, but focus on reading tomorrow. Perfect. If you have Past Perfect, I don't know what they do. And if you have Notman, they have the class summary. Those are things. You should worry about adding knowledge. Maybe read customer accounts tomorrow. Make sure you watch my suitability video and my How to Pass the Series 6 video. I know you're not taking the 6, but it's variable annuities and mutual funds. I have a risk one. Some people said they make a playlist out of it. It doesn't hurt. Tomorrow should be about adding knowledge. If you have Kaplan, instead of taking a test, what some people I tell people to do is create a really long ass exam. Okay. Okay. Right. So the whole thing is maybe somebody else can start it if she's getting into it. I think it's a good idea and maybe you can do something, but what happens is everyone's so focused on studying. Back to Julia. So tomorrow, maybe make a really long exam and then just do the questions to see the answers. Okay. Okay. Just to see the answers right away. So you say you see a question, you leave it on Q&A where you can see the answers right away. Look at a question and answer it right away. If you know it, you know it. If you don't, you don't. But it's really about getting to the answer. Carolyn's no difference. A corporate spread and a municipal spread are the same thing, unless you're talking about the trade. There's a difference between a market maker spread and then the underwriter spread. Underwriter spread is the same for corporate immunity or even a new issue. It's the same thing. It's the difference between when the issuer receives and what they sell it to the public at. Okay, so now, so that's what I'm saying. So don't go crazy. Okay. So competitive is mostly going to be GO. Competitive and firm commitment kind of GO. And negotiator is more for everything else, revenues and stuff like that. And usually it's the best efforts. Hope that helps, Julie. Okay. But again, don't focus on tests tomorrow. And don't stay up late tonight or tomorrow. Okay. Okay. The 66. Yeah, here's the thing, Johnny. The 66 is freaking hard. Okay. It is a hard test. It has a higher fail rate than the 7. It's only harder because there's more, it's not new topics, but it's new concepts that you have to pick up and the laws. Okay. So Shah, how do you book your own? If you Google FINRA SIE exam and you go to the FINRA site, don't go anywhere else because they'll charge you for it. If you go to the FINRA website, if you do FINRA, in one of these videos, I'll try to put it in there. I thought I made a video on how to do it. Look to see if I did. I might have. But either way, you go to FINRA SIE, type in FINRA SIE exam, and it show up and go to the FINRA site. It'll go there. You'll click on it, and it'll just walk you right through the whole process. You have to pay the fees. It'll be a U10. You have to you have to fill out all the information, like the last 10 years. And then if you don't have a job, make sure you opt into the FIND system, the FIND system in the FINRA website. That puts your name on a list of people who are looking for workers. Okay. Remember the FIND system. But if you're registered already, you can't opt in. But if you don't have a job, you can opt into the FIND system. Okay. Okay. Yeah, I get it. Okay. That's true, Greg. Okay. Okay. Remember, everyone, do not second guess. Just take the damn question. Don't bring your own shit into the test. Don't bring your own shit into the questions. Okay. Okay. Yep. There you go. I got it. Okay. So keep in mind when you take an exam, when you take it, everyone who's taking the test in the next few days, see the answer it. And you remember, you're going to feel like you're failing the whole time because the 4 choice answers are not that good. They're not that close to the real test. Well, like what you've studied and you go, oh, I know it's this. It's going to be just a little bit off. And it's going to feel like you're not answering it. And after you do that for 20 times in a row, you're going to feel like you're failing. You're not. You're doing fine. You're passing. You just feel like you're failing. Everyone I know who's come into me and said, I feel like I did great, usually struggled. The ones who felt like they're failing the whole time, they rocked the test. They did well because it's written that way to make you feel that way. And don't throw everything into the fucking mark for review. Put some of it in there, okay? Put the stuff that you're either 50-50 on or the stuff that really looks too long and you just want to do it later, okay? Okay. Oh, I'm glad. Okay, there you go. So maybe that'll help you, Shah. Thank you. Oh, 100. Thank you very much. Okay, I'm so happy. That's great. That's awesome. Thank you. Okay. Okay. See, now I feel guilty. I'm gonna have to stay on for a couple of minutes. Okay. So Alejandro, what's your next test? Are you taking this? You let me know. Text me what you. Okay. Hold on. No, here. Find your content. Okay. So here's the thing. You can't get the 7. You can't get the 7 before you start. But okay, Alejandro. Did you start reading it? You got us. Oh, Carolyn, same thing. Okay. Okay. Greg, did you really have to go there? Did you really have to put fucking Tom Brady's name on my goddamn chat? Did you really have to do that? I'm gonna have to report your ass. Okay. Now, Panda, you cannot take the 7 without a job. But I do think it does help to have the SIE. You can take the SIE and the 63 or 66 before you start working. I do respect the bastard, but I hate him because I'm a Jet fan. Although we wouldn't win anyway. So Panda, if you take the SIE and the 63 or 66 first, yes, I think it does help. Okay. It does help because, okay, it's because that's one less thing that they're going to worry about you. I had one guy who was at Bank of America. He got the SIE done. He got the 66 done. Girl at Morgan Stanley did it this spring too, where she got it all done. And then she started working at Morgan Stanley. So she was ready. They gave her 6 months to take the 7 and she banged it out in 5 weeks. It was great. So I do agree that if you guys have friends in college, tell them to take the test, the SIE in college. And even if they take the 63 and the 66, thank you, Greg. I feel better. I'm not going to ban you from my live anymore. Okay. So Carolyn, minimum maintenance and maintenance call. Maintenance call is when they tell you to put the money in. Minimum maintenance is when your equity falls to 25%. Okay. 25%, and then, or on the short side, 30. That's minimum maintenance. If you go below that, they do the maintenance call where they ask you. The margin call is the 50%, the Reg T. Maintenance call is when you go below 25 or 30%. Okay. Awesome. No, it's fine. Those are legit things. Okay. All done with reading. Finished my last day of virtual review. Okay. Beautiful. I love that. Okay. So So here's the thing. Okay. Yes, it's two different things, and we'll talk about that real quick. Now, okay. So now, Alejandro, so yeah, that's perfect. Work on the race, get that done. Get your own notes down, and then maybe you and Greg can hook up, because Greg, I got to get him motivated to studying for it. Thank you, I appreciate it. So now, thank you, I appreciate it. So now, I'm not turning down money. This is awesome. It makes me feel so fun. Okay, so now, just keep on that. Keep on the review. Keep reading. My Series 63 playlist has some 66. I mean, that's the regs part of it, and that'll help. I think if you go to Investopedia, they do a real good job working on the PV, present value, future value stuff. Okay. Okay. Yeah. Past perfect kicks your ass. They really, really, really challenge you, because they want you to do the math. Okay. I know, I'm working on it, Cynthia. So, Alejandro, remember one thing: the math part of the past perfect is not an exam. On the 66, if you do more than one math problem, that's too much. So, and that's the problem with past perfect. They make you try to figure out present value, future value, where you don't have to. Okay. Okay. Oh, Johnny. Yes. Somebody else asked that too. There's a few. There's usually one or two annuity and one or two insurance questions. Some get none, but it's more about the difference between term and life. And Johnny, I have that one had to pass the Series 6. It's a whole thing on insurance. I know you're taking the 66, but there's one that's about 12 minutes on insurance. That's what you need to know for the 66. Okay. Yeah, the review classes, Jessica, I want to hear how that review class is on Past Perfect. Okay. Let me know. Okay. Okay, so real quick, beta is a volatility marker. So it's basically saying how much we move, how much we're expected to move in response to the market. So if I have a beta of 1.5 and the market goes up 10%, my portfolio should go up 1.5 times that. So I should go up 15%. Okay. That's beta. So if you have a 1.8, it's 1.8 times the return. If it's a 0.8, it's 0.8 times. That's expected. It's not guaranteed. It's expected. That's beta, how volatile the market is. The higher the number, the more volatile it is. Alpha is what you do better than that. So if I have a beta of 1.5 and the market goes up 10%, I should go up 15%. Okay. If I then do 17%, I actually did 2 points better. That's the alpha, 2 points of alpha. That's it. So beta is against the whole market. Alpha is how you do against what you're expected to do. Okay. Okay. You can take the 66 anytime you want. Here's the thing. The 66 is not, so everyone who's taking the 66, if you want to know the insurance stuff, go to my How to Pass the Series 6 insurance video. It's like 12 minutes, and it's a very straightforward explanation of the insurance. Okay. Now, you can take the 66 and the 7 and the SIE. You can take the 66. You can say that a little bit, but you can have a portfolio. Beta and alpha are for everything, okay, for stocks and portfolios. So, like if you look at a mutual fund, sometimes they say, some of the mutual funds have a certain beta based on the portfolio they have. So back to this, Richard. So the 66 is worthless without the 7, but you can absolutely take the 66. Thank you again, Alejandro. To actually take the 66 before you take the 7. I have a lot of people. Like I said, I have a lot of students who don't want the pressure. Alejandro, I appreciate it so much. Thank you. If you take the SIE and the 66 or the 63 first, then you can take the 7. Okay. You can take the 7 after. So, right. So you need, yes, at 100% right, Greg. You need both the 7 and the 66 to do the work. The 66 is worthless without the 7. You can't even take the 6 for it. So if you're taking the 6, you can only take the 63 and 65. If you're taking the 7, you can take the 66. The 67 and the 66 are co-requisites that you just need them both. Okay. Okay. So if the fund, so what they ask a lot, I know, I love it. It's coming down. I wish I could do a lot of thing. So now, hold on, wait, he asked something. Okay. I can take the 66. You do not need to be sponsored for this. for the 66. If you are registered with a firm with a U4, you can still register and take the 66 by yourself. But I do think you're going to have to ask them permission, because they're going to get a notification that you're registered that way. And you want to make sure it's not an awkward conversation. Okay. Anyone else want to make it rain? Totally kidding. So now, so sometimes they ask, what's the difference if a fund manager leaves a mutual fund? It is going to be, okay, what it is the difference between managers is the alpha. So if I'm a manager of a portfolio and you're a manager of a portfolio, and we have the same exact portfolio, your talent is the alpha. If you do better than me, that's alpha. It's like maybe you return 8% and I run 6%. Okay, that's right. So Cynthia, don't worry about the 66. It is really not a lot of math. You'll see the review. It is not a lot of math at all. It is mostly going to be theory on this stuff. Okay. Yeah, that's the problem, Andre. The good thing is the 66 is much more straightforward than the 63. Absolutely. The 63 is kind of moving all over the place, and the 66 is a little more straightforward, and the 63 has a lot of confusing words. Both written by NASA, both written by lawyers who are just cruel. Because some people the test felt easy, but then they miss it. They come to me after they miss it because they go, the questions seem easy, but what happens is it's the answers that are a little bit off. That's all. Okay. So again, Jessica, the difference between switching a manager, the alpha is going to change, not the beta, because the beta is based on the securities in general. Okay. I think that works. I do have a phone call I have to make after this. Thank Alejandro. I can't thank you enough. That's awesome. Yes, you take either the 63 and 65 or the 66. Natalie, how are you? I haven't seen you on. Okay. So Eddie, boom. Now, Training Consultants QBank is closer than the other exams to the style of the exam. I think when you took it, it looks like it, but it is a slightly easier. So you want to be in the 80s, high 70s, low 80s with Training Consultants. No, Johnny, I'm not the man. Alejandro's the man. I love you guys. I will talk to you guys later. I'll see you Thursday. I don't do any of those. If I do them, I'm probably going to put it behind a paywall, because that's what, oh, that's funny, Arlen. That's right. I'm so happy. Okay. Okay. I don't do any spreads. That's most of my tutoring. Most of my tutoring is some options and stuff like that anyway. Okay. I can do that. I'll do that. Thank you, Audrey. Thank you. So you're going to make me stay here all night. So CAP-M. So understand CAP-M. CAP-M is straightforward. Are you getting enough? Yes. Training consultants are the one that the vendor stole them from. Okay. Yeah, I know everyone wants that, but the FINRA came after him and went after him. Training Consultants is the one that stole all the questions from FINRA. And that's true. They have the same style, but they had to purge a lot of them. But again, their questions are very similar, but slightly easier than the exam. So you want to be in the high 70s, low 80s. Okay. So now, CAP-M. This is for everyone taking the 66 and some of the 7. CAP-M is Capital Asset Pricing Model. Okay. Now, so CAP-M, see, sometimes I forget where I'm going. It's risk reward. It is the difference between, it's basically going, if I want more reward, I have to take more risk. Okay. If I want a better return, I have to take more risk. So you're basically balancing risk and reward. To get more reward, you need more risk. That's capital asset pricing model. We know, again, I'm going to say it, it's risk and reward. And one of the things that measures that is the Sharpe ratio, which is, yeah, they sued them. It was absolutely true. They did steal and they got sued for like $1 million and then they settled. Because supposedly the mom and the son took the exam like 62 times and failed it to steal the questions. So FINRA went at him and said one of two things. Either you're taking it to fail, or you're taking it to fail so you can memorize the questions, or you guys have no idea what you're doing. So you failed it 62 times. So they had to kind of admit that they were doing that, or admit that they didn't know what they were doing. Again, Sharpe ratio measures, are you getting enough reward for the risk you're taking? So that's going to be your expected return minus the risk-free rate over standard deviation, which is volatility. You just have to know that concept, that the Sharpe ratio is under cap M a little bit, and it's about, are you getting enough reward for the risk you're taking? Okay. Yeah, that's true. I am telling you, there are definitely going to be questions. Every vendor has a question or two, but that's where, oh, that's funny. Alejandro, if you want to just meet me for a session, it'd probably be cheaper, but no, it wouldn't be cheaper, but I appreciate it. This is awesome. So keep in mind that training consultants did steal it all. That was great. So every vendor has a couple questions that are matching it. But remember something, STC has crunch time facts, which are like things that may or may not have been on an exam. Knotman has their class summary, which may or may have been on the exam. Kaplan, okay? No, I think it was a while ago. It was a few years ago. Okay. But I mean, obviously some of their stuff is still there. And then Kaplan's I think it's their trending topics. So each one has their own thing. Okay. So now I really do have to go because I have a person calling me, a friend of mine from high school who's calling me, wants some help. Alejandro, thank you. Feel free to text me, shoot me emails. I'll answer questions from back and forth. I love you. Yeah, but that's fine, Kelly. Their stuff looks like it, but again, it's not a cheap program, and you're better off working on the Kaplan's, the Knotman's, STC. Achievable is good for everything but the 63, 65, 66. And Alejandro, you're going to get a focus on the rules and regs, and we'll talk over the week or so. Guys, thank you very much. Please like and subscribe. Share this shit with people. And Kyle, if you're still on, make sure you can tell people in the group. We'll see what happens. Jennifer, yeah, Kelly, that's awesome. STC and Kaplan's good. I liked it. Okay, everyone, you all have a good night. JC, I'll see you tomorrow. And everyone, wash your hands. And just for Greg, may the force be with you.